Hi, my name is Linda Eedes, and I'm a senior member of the Regarding Capital Management or RECM investment team. Today I'm going to be talking to you about the RECM Global Feeder Fund. Now, this fund is an equity-centric fund which is benchmarked against the MSCI World Index, and it feeds directly into our global fund, which is priced in US dollars, but the feeder fund is of course priced in rands. Now, looking at the returns for the feeder fund as at the end of May 2013, you can see that since inception of the feeder fund, which is April 2007, this fund has managed to substantially outperform its benchmark of the MSCI World Index. But the important thing is how it's been able to do that through various market environments. If we look at the next graph, you can see that the price of this fund is represented by the maroon line, and the index is represented by the gray line. And you can see that this fund has been through some pretty interesting market environments over the time that it's been in existence. And in particular, I'd like to draw your attention to the financial crisis. Now, in the lead up to the financial crisis, this fund was actually underperforming its benchmark because the stocks which are taking the market to its highs were the expensive stocks which were getting even more expensive. And we were focusing our attention, as we always do, on investing in cheap stocks, which at the time were not obviously producing the results of the expensive stocks in the market. But if you want to protect your client's capital against the risk of permanent capital loss, you have to stay away from the stocks which are trading above what they're worth. Because when they correct from those levels, that's a permanent loss of capital. Now, that's very different to the loss of capital that you get from price declines when you buy cheap assets, which may become cheaper initially, but then reprice to what they're worth over time. That's a temporary loss of capital. Now, if you look at the profile of the returns, you can see that the fund really held its ground during the financial crisis when the global market fell by close to 50%. And the recovery for that fund was far quicker than the index itself, which has actually only recently recovered from its peak prior to the financial crisis. The fund, as I say, is managed in exactly the same way as all the other funds at RECM, using the value philosophy, which has done a very good job of protecting against downside risk while still generating superior returns over time. Looking at the makeup of the fund, we take a look first at the asset allocation versus cash, so equities versus cash, and you can see that there is still a residual cash amount of 17.6%. Now, that is a byproduct of whether we're finding value opportunities today. And what has happened in the global environment is that a lot of our undervalued opportunities have started to reprice quite quickly. And we've had to reduce those positions accordingly and haven't been able to deploy that cash as quickly as those stocks have repriced. But every day we look for those opportunities, and there are many on our desks today which we're considering. Looking at the makeup of the portfolio in terms of the top 10 holdings, you can see quite a diversified set of investment opportunities there. Starting with, as I mentioned previously, Microsoft and a few other sort of IT themes coming through, Intel, and Ichirizuka Fund, which is the second biggest holding in the fund, actually represents an entry point into the Japanese equity market. And this is a very interesting opportunity among small cap companies in Japan. Now, we can't speak Japanese, unfortunately, so we've partnered up with Milestone Asset Management, who follow a very similar philosophy to us, to actually access this overwhelming opportunity which we want to take advantage of in that market. The bigger large caps in Japan, we tend to invest in directly ourselves. We've also had some interesting exposure to regions which you might be surprised to hear of, areas such as Europe, which are very much in the negative headlines. Carrefour is the second biggest retailer in the world after Walmart. We invested in Carrefour in late 2011, early 2012, in the midst of the European recession. Now, investing in a retailer in the midst of the recession probably doesn't sound like a very good idea. But when you're making long-term investment decisions for your clients, often short-term negative information can present an overwhelming opportunity to buy high-quality businesses like Carrefour at incredibly low prices. Now, Carrefour has actually done very well for our investors. It's up close to 50% in US dollar terms since we bought it. But interestingly, the fundamentals of the business and the environment have not changed all that much. So you don't know when that repricing is going to happen, but what we do know is that buying cheap assets often leads to good results. You can see some of the local themes coming through there. Companies which we believe are of a global quality standard, such as Amplats, by virtue of sitting on the majority of the world's platinum reserves, along with Lonmin and Implats, also represent a wonderful opportunity from a global perspective. So this fund, as I mentioned, looks for undervalued opportunities and focuses exclusively on high-quality businesses. The combination of those two things means that we are best able to protect our investors against permanent capital loss, whilst generating for them superior returns over time.